The following is an update and technical analysis on crude oil, West Texas Intermediate futures based upon the daily interval. And wow, talk about a series of headlines and theories behind today's significant crash in crude oil prices, spanning from potential influences of Chinese economic data, from comments of the Federal Reserve speakers to the ultimate climax of the Israel-Hamas conflict. And I had mentioned in that previous technical analysis, we would potentially go on to have a really ping pong effect between these two primary reactionary uptrend lines. And wow, did we get that complete reaction, especially if you shorted right at the top of that primary trend line. The entirety of that trade thus far has been good for a 15% crash in the spot price of crude oil. And I was adamant how imperative it was for long traders and or bull traders to defend the top of this primary trading range to avoid any technical sell signals and damage that would be infused into some of these technical momentum indicators. We had a beautiful looking head and shoulder classic looking top, completely undercut the neckline. I had added this renewed uptrend line with multiple reactions, and really from the top of that primary trading range, we were rejected 1, 2, 3, 4 days in a row there. And that was, again, offering a great risk reward ratio short trade setup off that 82.61 price resistance. And that was met with a flurry of selling, completely undercut the 81.60 price support there, and it never looked back. We have now completely undercut the 200-day moving average and the 77.84 price support there, as some of the technical momentum indicators have been completely bludgeoned with bearish crossovers here in the moving average convergence below the zero line thresholds, and as well as the oscillator completely crashing down below. You have the stochastics sort of hovering around this key inflection point as well. I'm going to take you to a much cleaner chart with the more significant level being the 73.20 price resistance. We'll be keeping a close eye on that level, as when you enter the back into the primary trading range, the odds are significant that you will reach the bottom of it and or the top of it among entering that primary channel. And that's exactly what it's had here. It's been defended multiple times heavily, where it's geared right back up to that top of that trading range. We've broke right through it below. We popped that level right back, geared right back to the top of that trading range. It was rejected impulsively. And you get the picture, just ultimate rejection and or price support levels that were heavily defended each and every time that primary trading range was inflicted upon the price action of the crude oil, spot price of crude oil. And here's the update of what I see now. We had that beautiful head and shoulder, classic looking top, nice split of the neckline, completely undercut that level, back tested multiple times. And here we are. The 73.20 price resistance support is the bottom of that trading range called 73.20, which correlates with the 786 fibs retracement called the 73.08 price support. And I have added a new primary reactionary uptrend line off the March beginning of 2023 reactionary lows, and that will be the ultimate safeguard and or price support level for any buyers and or long traders for the spot price of crude oil, especially if we start to really undercut completely, never even look back to the 200-day moving average and the 618 fibs retracement resistance. That would spell especially hard, big nosedive, complete all-out crash to the downside. I would play the risk reward ratio and the long trade setup for a potential move on a recovery of the spot price of crude oil, and then correlating with the bottom of the trading range in the previous chart that I had shown you. So that will be the ultimate biggest key inflection point for crude oil, especially if we have positive and or bullish divergences that begin to form there on the near term, hourly, 30-minute intervals. That would give you the utmost, the greatest risk reward ratio on a bigger move to the upside if and when we go on to revisit this primary reactionary uptrend line correlated with the 73.94 price support, 72.70. And if we were to undercut bear traders, short sellers want to see a complete breakdown in this primary uptrend line for a potential revisiting of the 70.09 price support. And then ultimately I have the 67.05 additional price support with just a ton of reaction right across that inflection point, which is the 1 fibs retracement 67.06 price support. And that will be the ultimate if things get really bad there. That is the ultimate buy zone, greatest inflection point, pure value for big buy to the long side in the spot price of black gold.